Share market defiance. Is the equity market ignoring the warnings of the bond market? We're going to have to stick around to the end to find out. Hi everyone, welcome to the Traders Circle weekly market update. Today is Tuesday, the 23rd of May. Now, just before I get into it, you do need to be aware that anything I say is general advice only. So it does not consider your personal financial circumstances, and you have to consider if what I'm saying is appropriate for you. The big news at the moment is the debt ceiling. The US government is rapidly approaching their spending limit, and that should be reached by the 1st of June, according to many sources. Now, this debt ceiling has been an issue or non-issue many times in the past decade, and each time it approaches, they do manage to wrangle some sort of deal and extend the limit further. This time around, just like the last few times, there does seem to be a bit of political brinkmanship, with each side trying to do some political point scoring on this and trying to, improve their standing as we go into a presidential election year next year. So the latest is that the President, Joe Biden, is meeting with Senate Republican leader Kevin McCarthy, and they said they're having productive talks at the moment, whatever that means. Now, believe it or not, the market doesn't seem to have responded too negatively to this debt ceiling at all. In fact, in a moment, we're going to see that the US market is right at their multi-month highs. If anything, it's been a positive. So as a deal seemingly is close to an agreement, we see the market tick up. And this is a really funny sort of response. There was no negative reaction to the debt ceiling approaching, but it seems like we might have a positive response to a deal being announced. It is my strong belief that if there is a deal announced and if there is a positive response, that positive response will be for 1 or 2 sessions only, and the market will very quickly realize that the deal is not a positive thing at all. If anything, it's the removal of a negative factor that the market never really responded to. So while we may see a positive move in the lead up, after a deal is announced, don't expect too prolonged a positive move higher. I suspect at most it'll be 2 sessions. Regardless, we'll have to wait and see. So expect something from the US government or the US political leaders in the next 2 weeks. The next thing I wanted to touch on is are the Australian small caps, the small micro caps listed on the Australian Securities Exchange. It's not something we touch on a lot, and it's certainly not something that's getting touched on much in the current market. If you're a small cap investor, I'm sure you're aware there's just no activity in the small cap space. None of these stocks are catching a bid. Some of them are seeing selling just as investors look to liquidate, get some cash. But yeah, there's just no activity going on here at all. If you're an Australian ASX listed stock with less than a few $100 million of market cap, you cannot find anyone willing to trade in your shares at the moment. There's just nothing going on there at all. Now, this is obviously not a great time for small cap investors, and these parts of the market do go through sort of boom bust phases. But if you are sort of predisposed to looking towards this end of the market, these are also times when great opportunities can appear. So look for something that you think, or that shows great longer term promise. Look for something that has the ability to generate revenues and then profits in future. None of this pipe dream stuff. Look for a real business trading at a reasonable value, and in a few years time it could be gold. But yeah, just not much activity happening in the small cap space, so I did want to give a shout out because they're not really getting much interest at all at the moment. Finally, I wanted to talk about bond yields, and bond yields here and in the US have been rising for the past fortnight, rising fairly strongly, I might add. It seems like these bond yields are starting to price in the potential for further future rate rises, both here and in the US. Now, equity market investors have so far ignored these rising bond yields. They've defied them, if you will, and they seem happy in their belief that this is the end of interest rate rises, that we've reached peak rates, and that basically we're going to see rate cuts by the end of the year. But the bond market is starting to change its tune on this. We're starting to see those yields tick up, and if that continues, eventually equity markets will have to follow suit. Eventually equity markets will pay attention and sell down if these bond yields keep rising. Keep in mind, this is a much larger, much more important market than the equity market, and equity investors can only be defiant for so long. Alright guys, those are the topics I wanted to discuss, so let's quickly touch on where the stock markets themselves currently sit. This is a chart of the XJO, the top 200 stocks by market capitalization, and we can see that it's just trading right around resistance. Let's say 7270 to 7300, and it has been unable to break through that resistance for the past fortnight. We do also have a potential downtrend line that has come in since the peaks of February. We touched that in April, again at the start of May, and we may be touching it again here. Interestingly enough, we spent pretty much all session testing that resistance before falling about 10 to 15 points on the close as we potentially responded to that downtrend line. So that leaves us in a giant pennant pattern. We've got possibly an uptrend since October, although it won't be confirmed unless we get another touch. We've got support at 7150, we've got resistance at 7300, and we've got that medium-term downtrend line, which now looks to be confirmed. Should we break higher, we'd need to close above 7300 before a move towards 7370 would look likely. And should we go lower, there's plenty of support levels here at 7150, 7100, but if those break, we're looking at 7000 and 6900. For the US market, this is the S&P 500, the largest 500 listed stocks in the US, and we can see that it's right at the key resistance level of 4200 index points. It's tested that for the last 3 sessions. It's been unable to close above it, but it really hasn't shown much of a reversal signal just yet. There might also be a potential short-term uptrend, and so far it's held that uptrend. So if it continues to hold and we break that resistance, we're probably looking at a move towards the next level at 4300. Should we break below that uptrend line, then you've got levels at 4050 and 4000. Alright guys, so it's pretty odd to me that the US market is continuing to grind into highs while the bond market is potentially pricing in further rate rises, and while we approach a potential US government debt ceiling event. Regardless, we could see a 1 or 2 day spike in markets if a debt ceiling deal is reached, but beyond that, I wouldn't be too optimistic given the headwinds these markets are facing. That's it for this week, guys. Let us know in the comments if you disagree with me. Let us know if you agree with me. Regardless, make sure you click subscribe, and I'll hopefully see you in the next one. Bye for now.